Hi there, I'm Lou, OptionFlow founder. Welcome to my new video. Today I want to share with you what is going on with one of my investments and a very interesting situation you could face investing with options. So, disclaimer as usual, I'm not here to telling you what to do with your money. You only are responsible and it's your business what to do with your money. It's only my personal experience. I share my ideas, my way of thinking, what I do with my money. It's my personal blog, so I do not tell anything about what you should do with your money. Okay, this is the disclaimer I do every time. So, what happens in the market? Some days ago, I opened a bull put on a currency, an underlying a currency, in particular Australian dollar, US dollar. Okay, so this is the chart. Just a few days ago. Okay, I opened a bull put, expiration date June. I sold 0.6250. Okay, at this level, and I bought at 0.58. Okay, so I the difference, what I paid and what I sold, I earn a premium of $120-$130, more or less, okay, per contract, okay, for each option sold. Okay, so this was the level. So what does it mean? Open a bull put, selling an option at this level. It means that I keep this premium, so this $120, if this underlines at June, okay, June the 5th, so more or less 70, 80 days, I don't know, will stay above this level. Okay, so this is the last, as you can see the chart, on the last 6 months. Okay, I sold an option under these minimums, okay, at 0.73, more or less. So I opened this investment. So what happened the following day? Okay, look at this. Boom. A big red candlestick against my position. Okay, it's a very huge price movement. Okay, and look at that. The following day, just some rest, and the day after, boom, another red candlestick. So you can see from 0.66 to 0.64, okay, in just 3 days. So what is happening to my position? My position is still safe. I have I set a stop loss, of course, for every investment. Now it's suffering, okay, but it's still okay because I am far from the price. That's why I do not like to sell weekly options or daily options, because you need to stay very close to the price. And if something happens like that, boom, it means stop loss or lose money with a high probability. So I work far from the price, but how far? I teach my OptionFlow method with step-by-step characteristics. Okay. So what is interesting is my position is suffering, okay, because of these 3 days price movement. So what's the choice now? I have 2 different options what to do. First option, I don't do anything. I have my stop loss. So if the price will continue, okay, to lose, okay, continue to go in this direction, stop loss, my protection will intervene, and I will close my position with the loss, okay, so reducing losses. What's the second option? And this is what I did, okay. I opened a bear call, so my vertical spread became an iron condor, because I sold an option, okay, here at the 0.69 above these maximums, as you can see here. So expiration date August, so more or less 100, a little bit more than 100 days to expiration. 0.69, and I bought 0.72, 73, okay. I used the exact difference between legs, like the bull put. This because there are two reasons. First reason, because I don't add margin, because my margin is already for this position, for this bull put. So opening an iron condor with the same difference of price between the legs, I don't need to add margin to open this position. In fact, the margin was reduced, okay. So, and I collected $155 for this op, and it's a correction. So if the price will continue, okay, this movement down, this position is going to suffer, okay, and maybe I will close with stop loss, but this position is going to earn, okay. So it's a protection, it's a correction, okay. And so what's the worst scenario and what's the best scenario? The worst scenario is the price will go down, okay, stop loss, and then suddenly starts to rise up, okay, boom, 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 and then stop loss here. So this is not so probable, okay. It's a very apocalyptic scenario, but this is the worst possible, okay. So rather than two premiums collected, two stop losses, okay, with on one underline. This is the absolutely worst, but really it's not probable scenario. What's the scenario, let's say in the middle? In the middle, I will collect one premium full, and the other position will close with stop loss. Okay, so I'm going to lose a little bit, but I would have reduced the loss because the other premium collected on the other side, okay. So the second scenario, one stop loss, one premium earned in full. So yes, there is a loss, but reduced, okay. So a little loss. A third scenario, the best scenario possible, it's that until June and August, the price will stay between 0.69 0.63, 0.64 and 0.68. 5. Okay, so until this range. Okay, so this would be the best scenario, because this scenario would let me earn from both sides. So from here, because this option sold would expire worthless, and the same for this option, because would expire worthless. So I will collect both premiums. Okay, this is the best scenario. What would be what will happen? I don't know. Okay, of course, we don't know what is going to happen, and that's why I like invest with a non-directional approach, because it's very difficult. It's impossible to know what the market is going to do. I don't know what Australian dollar or US dollar is going to do, because there are really a lot of things that would happen. Okay, and even not predictable. Okay, something starts with a war, with a government law, with something we cannot predict. Okay, so it's easier, and with statistic and time on my side, predict what the market won't probably do. Okay, so that's why in my prediction I don't have a prediction like my gut is telling me that. Okay, of course that is a method, what I teach, OptionFlow method. There are strict parameters. Okay, so a checklist. If you have green light with every point, you can open an investment. Okay, so it's very precise, very replicable for everyone, even if you if you don't know about options. Okay, or just a little bit. I make it very simple, so you can save tons of time, tons of money, and you have your mind clear what to do in any market scenario. So that's why it's easy to predict that in 3 months, 2-3 months, price would stay above this level. Okay, yeah, it's probable. Okay, my probability of profit when I opened this position was about 90%. It's not 100%, it's about 90. It means that there is this 10% that everything could happen. Okay, in this case, something happened just the day after. Okay, so my timing was really wrong. Okay, but I'm not worried, because okay, I open. So I made an iron condor, in fact. So there is a correction, no problem. I have different underlines, decorrelated, diversified. I have lots of diversification on the underlyings I invest, so I'm not worried. So okay, day after, okay, timing is was not so great. Okay, I don't mind. I have my correction following my method, and I will see. Okay, so this is a very interesting case that could happen to you. So you invest, and the day after or the following days, the underlying starts to go against you. Okay, it happens more than what you expect. So no problem. If you know what to do, it's very simple. Okay, you know what to do. Could be a loss, yes, but reduced because we made a correction. So this is I wanted to share with you today. So if you want to know what to do with your money, invest your money in any market condition, and especially with a mentor who teaches you one-on-one, okay, just not the classic theoretical course, but because your time is precious, time is value, and you know that working one-on-one, it means know exactly what to do, save your time, save your money, and you can do your business, your work, spend time with your family, or time what you want, having a method to invest in the market to add a stream of income month after month, year after year. So let's see if option flow method could fit for you. There is a link, a calendar link below this video. You can book a free consultation call with me. So we will see in your specific situation. It could be a good fit for you and for your needs. Okay, thanks for watching. Subscribe my channel. See you on the next video. Bye.